Alright, y'all, welcome back to the channel. Today, I want to talk about this company right here that I found. Now, the company we're going to be talking about that I got pulled up here is called Kickfurther. Now, what they do is small companies that are looking to raise capital that kind of have a harder time going to a bank and getting a big enough loan to fund whatever business venture they're going into. If they can't go to a bank or somebody else like that and get favorable rates and terms, then they go to these guys over at Kickfurther and look into them. So what Kickfurther does is they say to the company that's needing the money, they say, okay, what's your company do? Let's say the company builds Legos, for example. I'm just using an example. Well, and they've got purchase orders lined up, but they don't have the upfront capital to make the Legos to fill the purchase orders. They need the capital to do it. Well, they go to Kickfurther, they show them their financials, and they say, Kickfurther, we need funding to pay for this project or to pay for this project we got going on with the Legos so we can fill our customers' orders. So Kickfurther says, okay, Company A, well, we're going to put together a deal or whatever. We're going to put together basically a loan. Let's say the company's needing $500,000. They say, okay, you need $500,000. So we're going to set up the loan at $500,000 and we're going to give an approximate time period for you to get the loan, get the money, and then once you get the money and get everything going, you have a certain time period to pay back the loan. Okay, so they set all that up. Let's say it's a 6-month term loan, just using an example. So they set up a 6-month term loan, and they say, okay, well, for this loan, you're going to be charged, let's say, 5-6% interest on the $500,000 amount. And the company says okay to that. Well, then what Kickfurther does on the flip side is they come to small investors and they say, okay, we have this company that needs $500,000. Would y'all each like to chip in a little bit of money to complete this loan? And if you do, if they sell all their merchandise, you get your money back plus the 5% on, you get a 5 to 6% return on your money. So basically how it kind of works is you're basically buying the company that needs the money to make the inventory. You're basically you're buying a future inventory on consignment in the hopes that they will sell that inventory to a customer and pay you back the principal plus whatever amount of interest that they agreed to in the package that they present on their website. That is kind of what they do. So they're a funding source for small companies that may have harder times getting loans from bigger institutions like banks or something like that. They can then go to these guys and maybe get the capital they need to get their business moving. So, and right here, this is some of the highlights that they give, saying why businesses should come to them for funding. Don't pay until you sell. See, that is one of the downside risks of being an investor with these people, is if you're on the investor side, you may not get your payback at all. You may lose all the money you put in and not get any back or only get half of it back because the company that you bought the inventory on consignment may go insolvent. So that's one of the major risks on the investor side. And then cheaper funding, 30% cheaper funding. I, again, don't know whether it's 30% cheaper, but it definitely can be cheaper for the company because somewhere else, if they go to like PayPal business or something like that, they might get charged rates of almost 100% APR in a year. So, yeah, in certain circumstances, this can be a way cheaper option for them. And again, depends on the scenario, depends on the company, but it definitely can be cheaper. And they say generally they don't. Each company that tries to get funded through Kickfurther, from what I've read on forums and stuff, they don't like to get companies that want more than $1 million or are asking for more than $1 million because it's too much risk in one company. That's kind of some of it. Now, that's not to say they don't allow more funding than that, because they do. It just varies by company. But, and then they give, see right here, amount raised 1.6 million. And then they got their explanation videos, but And the companies, another thing too, is they set up their initial payment schedule. But again, if they're not making sales, they don't have to stick to that payment schedule, or they can pay off early. Now, they still have to pay that percentage. If they said they was going to give you a 5% return, they have to give you a 5% return, but they can pay it back the very next day if they want to. So their payment schedule is very, what I would say, relaxed and flexible, in certain circumstances almost to a detriment. So just be aware of that. And that's basically. And then here they show some of their current projects and some of the projects that they had before. It's not really that hard of a deal. I mean, it's pretty simple to understand the concept. It's just in the research and stuff, then it becomes a lot more complicated. But that's the basic gist of the idea here, is to give smaller investors a chance to invest in very young companies that may have a high potential for return, and on the small businesses side, to give the small businesses an alternative, cheaper funding source than going to banks and other places that may, one, not take them, or two, if they do take them, charge them enormous amounts of interest. So it's just a cheaper, easier alternative for smaller businesses to get into. But that's kind of just my brief overview about this. That's not in depth at all, but it's just kind of to float the idea out here that, hey, there's companies like this that are doing these things for small businesses. So it's just something interesting to read about, look into, and if you're curious, you can dig a little bit more if you'd like. But with that being said, y'all, I will see y'all in the next video, and have a good one.